conditions. Let's talk about news and economic data, trading strategies in futures trading. Involves trading based on news and economic reports that have the potential to cause significant market movements. Traders must be very quick to react, as the market's response to news can be immediate and volatile. What is the primary objective of news and economic data trading strategies in futures trading? The primary objective of news and economic data trading strategies in futures trading is to capitalize on market movements triggered by news events. These strategies aim to take advantage of the volatility and price fluctuations that often follow major news releases or economic data announcements. The primary objective of trading based on news and economic data in futures markets is to capitalize on the significant market movements that these events can trigger. This strategy is often oriented towards speculation and capital appreciation, as traders aim to leverage the immediate market response to news releases for potential gains. How do news and economic data trading strategies adapt to different market conditions? News and economic data trading strategies are highly effective in volatile and news-sensitive markets. They are particularly suitable for periods when markets are highly reactive to economic reports, geopolitical events, or any significant news that can impact market sentiment and prices. This strategy is particularly effective in volatile markets that are sensitive to news and economic data. Markets that react strongly to geopolitical events, economic reports, and corporate news provide fertile ground for this strategy. It is less effective in markets where such news has a muted impact or is already priced in. What is the risk profile associated with news and economic data trading strategies? The risk profile associated with news and economic data trading strategies involves navigating the risks of rapid and unpredictable market reactions. Markets can respond quickly and dramatically to news, and there is a risk that market movements may not align with initial expectations based on the news. The key risk in news and economic data trading is the market's rapid and sometimes unpredictable reaction to news, which can lead to significant price volatility. There is a risk of the market moving against the position if the news interpretation is incorrect or if market sentiment shifts unexpectedly. Quick reaction times and a solid understanding of market sentiment are essential to manage these risks effectively. What potential rewards can be expected from news and economic data trading strategies? The potential rewards from news and economic data trading strategies come from profiting from the accurate anticipation of news impact. If a trader correctly predicts how the market will react to a news event, they can position themselves to capitalize on the resulting market movements. The reward potential in this strategy lies in accurately anticipating the market's reaction to news and entering trades that align with this reaction. The best case scenario is a well-timed entry just before the news release, capitalizing on the immediate market movement. However, traders should be aware of the average expected returns and the fact that not all news will result in profitable opportunities. What are the key steps and considerations in implementing news and economic data trading strategies in futures trading? Key steps and considerations in implementing news and economic data trading strategies include effective execution of news-based trades. This involves staying informed about upcoming news events, understanding the potential market impact of different types of news, and executing trades quickly and efficiently in response to news releases. Implementing a news and economic data trading strategy involves Staying informed about upcoming economic reports, news events, and geopolitical developments that could impact the markets. Using resources like economic calendars to track important release dates and times. Analyzing pre-release market sentiment and positioning to gauge potential market reactions. Quickly interpreting news outcomes and executing trades in response to the actual data versus market expectations. Setting predefined entry and exit points along with stop-loss orders to manage the high volatility and fast-paced nature of news-based trading. Being aware of factors like liquidity and the specific characteristics of the futures contract being traded. Trading based on news and economic data in futures markets requires traders to be well informed, quick to react, and adept at interpreting both the news and the market's response to it. A successful trader in this domain is one who can combine rapid execution with a keen understanding of market dynamics and sentiment.